All right, Sev, I'm gonna go over some numbers with you, some custom proposals. So in this video, I'm gonna go over some basic scenarios and basic payment options you have and things like that. But on top of that, I'm gonna enlighten your eyes with some other products that are out there that no one really knows, but only the mortgage brokers. And I'm gonna explain why no one knows and why not a lot of mortgage brokers go with this product. Okay, so I look at overall financial picture of your family and then your futures and stuff like that. Right now in the industry, 5-year fixed, you're actually we're not getting a much discount on a 5-year fixed. 3-year fixed, you have better rates. I think that's okay. Now, the only reason why I could look into 5-year fixed for you is because that you mentioned Yasmin is doing some business in the next year or two. Sometimes with business, it takes a little bit of time to generate income that we can use to get you qualified for a different lender. So it might be a better idea to do 5 years, but considering that you're getting a raise and your mortgage loan, like you probably alone can qualify for this loan amount, so shouldn't be too much of an issue. Now we're gonna look at 3 years just because everyone else is going 3-year or variable right now. Okay. So the first one over here, first column over here is the 438. That's going to be your mortgage amount by August 1st. Okay. We're not touching it until August 1st because you have good rates right now. Okay. Right now, unfortunately, the bond's been climbing back up. So I did get 3.8s and 3.74s and stuff like that. I don't think that's going to be a scenario once we put this in. Okay. So I just punched in 3.94, which is pretty reasonable for us. Okay. 3-year, you have 19 years of amortization left. We kept it that. And then your monthly payment is going to be about 27.25. Okay. And that's excluding taxes. We're not doing taxes with lenders anymore because that's just bullshit. Okay. So that's the number over here. Now, let's say you're a little bit tight on this cash flow. You don't like how this looks. We could actually stretch out your amortization back to 25 years. Okay. Same rate, same term, but amortization back to 25 years to free up the cash flow. Might not be the case for you. Just throwing it out there so that you have some options on the table. Okay. So 2290 is going to be your monthly payment, but your amortization is going to be 25 years, meaning that it'll take 25 years to pay off your mortgage instead of 19. Okay. Now, next one is with TD. So this is actually the interest rate that they're offering right now on new clients with $1,000 cash back. Okay. So just keep that in mind. Now, these first two, you don't need to pay anything out of your pocket to transfer the lender. Okay. I pay that and lenders pay it, the other half. Okay. So this is fine. This, you might have to pay a little bit just because the banks, they're just different. They like to grab money. But that's what the $1,000 cashback is for. The only caveat to that is that you have to open up a TD checking account with them to receive that $1,000 cashback. Okay, so let's say the reason why I'm bringing up the TD is because they have home equity line of credit. Okay, the reason why I suggest home equity line of credit is because of your future plans. Okay, so you're doing a business, you're running a business. There's gonna be upfront costs, and there's gonna be some money that you need to pull out from that you need to pull out. I don't want you to be pulling out from like a registered RSP or anything like that, because then you're gonna be taxed like crazy. It's much better if you could just pull it out from the line of credit and you write all the interest off as a business expense, because you can do that. Okay, so basically your home equity line of credit interest will be reduced down to quite a bit if you actually write it off and work with the right accountant. Okay, so 4.14 is with home equity line of credits. Payment's gonna be that with the 19-year amortization. A little bit higher, obviously, because of the higher interest rate, but that's what it is. The second column, like I said, now with banks, with this much equity, you could actually stretch it back to 30 years if you want to. So this is 21. This is to free up your cash flow. Now, you might not want it. You could go back to 25 years. You can do 23 years. We can work with that. Okay. Just those three are kind of the options, straightforward options for you. Okay. Now I'm going to get into the interesting stuff. Now, I'm going to be very broad about this product. Okay. Just going to give you the outcome, and then why not a lot of people know this, and kind of a general idea. But if you want it, then let me know. We can book a call. It's going to be a 30-minute session to just educate you on this product, okay? Manulife. Manulife one is, I'm sure you've heard of Manulife. We in the nursing community, I think we had dealt with. Anyways, TOH is moving everything to Manulife. They're like a insurance thing company. Not a lot of people know that they do mortgages. Okay, Manulife one is a special product where you can have checking, savings, and mortgages all in one account. Okay, just gonna go straight into the outcome. Same payments. Here, 2775. It'll take 19 years to pay off your mortgage. With Manulife One, it could take 13 years, so you could shave off about a couple of years for sure. Okay. Now, why have I never heard of this? Because first of all, you can only set this up with mortgage broker. Second of all, mortgage brokers don't a lot of people don't like this product because this is like one and only mortgage product that you will ever need if you fit the criteria. Like, because they won't win you back at your renewal, because this is like, I set you up and then you do the right thing, and then that's it. Like there's no reason for you to move around. Like there's no reason for you to shop around. Okay, that's why they don't bring this up, because obviously they want to win you back so they can earn some more money at the renewal. Okay, so how it works is basically, everything stays in one account. So basically, you start off with negative 438K, and that's your like checking account. Almost like think of it as like a huge checking account with a huge overdraft. As soon as your income comes, as soon as you get paid, that money goes into your checking main account, and that reduces the mortgage amount by the amount that you got paid. Okay, so I just used $6,000 monthly for both of you, so $12,000, and then I used expenses of like mortgage plus $8,000. I don't think you use $8,000, so this is, anyways, we can dial this in if you want to learn more. Okay, basically what that does is it basically puts a prepayment with all of your money, and then by the end of the month, your expenses, it just gets added into the mortgage. But here's the criteria. So these are the criteria that you need to fit to make this work. Okay, first, you need to have a delta in your monthly cash flow, meaning that after mortgage payments and expenses, you have some money left over. Okay, because that's added principal almost. Okay, second, you need to be good with your finances, which I already asked you, and you guys are good. Like, anything over 500 you discuss, that's something that you need to be good at, because with this, a lot of people, oh my goodness, like I have access to equity. They just use the money. Like, if you don't set it up with the right people, they just go crazy with it. Okay. So that's it. So those two are the criteria. Now, I mean, the third one, you need to have equity built in your home to make this work, but obviously you do already. So I'm not going to go over that. So those are the couple of things that you need to fit to make this product work. And this also works as a HELOC, home equity line of credit, which goes back to the original plan that, Yasmin starting a new business and stuff like that is a lot easier for you to manage. You can just open up a sub HELOC account, and then you can just pull money in, then you can have that separately for business, and you can write off interest. Like, it's just the one and only product that you'll ever need. But obviously, it's like I said, 30-minute session to learn this and then fully understand. So if you like the idea, if you want to get more into this, let me know. But if not, just stick to these options. These rates can change. Like I said, bonds have been creeping up every day. So I might not get these. I know for sure I'm going to get 4.144 with TD, but these might be different. Okay. Plus you have the TOH cashback that I give for our colleagues. Okay. All right. Let me know. Bye.